Book of business financing. If you own an insurance company or are looking to acquire an insurance company, this is the best type of financing you are going to get. It's also the least known about type of financing as well. So today I want to fix all of that. I want to actually reveal everything you need to know about book of business financing and how to use a book of business to actually be able to get low rate financing for probably more money than you're even looking to borrow. So by the end of this training, you're going to understand what book of business financing is, how it works. You're going to know how to get it, and you're going to know everything you need to know about tapping into this powerful type of financing to get the funding you need to be able to either get money for your insurance company or to be able to use it to acquire an actual insurance business. Okay, so let's start with the beginning. What is book of business financing? Well, if you think about an insurance agency ultimately gets customers, and those customers come in and oftentimes auto renew. So what that means, if you think about it, is that I have car insurance. Okay, I've been with the same car insurance company for 2 decades, over 20 years. So every year they send me something and stating my policy is going to renew, and I go ahead and let it auto renew. Right. So I don't usually switch companies. Most people don't switch insurance companies every year unless something weird happens. A lot of people stay with the insurance company they are. So what happens is this becomes what are called renewables, and it's called a lot of different things, but basically renewables are people that are just renewing and auto renewing and then actually staying into that policy that they have. So this is why those that get into the insurance industry see that basically the clients they have just compound. They build and build and build. So one of my good friends, Ashley, launched an insurance agency a few years ago. And again, she's not even pulling a lot of money out of it yet. But she's building this massive clientele that keeps renewing. And then ultimately, another 2 or 3 years down the road, she's going to have a substantial income that's going to stay pretty stable because all those clients that she brought in are just auto renewing and repurchasing. And every time they repurchase and re-up on those insurance policies the next year, well, she continues to get paid. So when we talk about book of business financing, it's basically a loan or a line of credit using that book of business as collateral. So we're basically looking at an insurance company. We're looking at the book of business they have, and that book of business is actually being used as collateral to be able to get financing. Now, a couple main ways this can be used. First of all, maybe you are an insurance agency right now. If so, this is probably the best kind of financing you're going to get just because the rates are so low, the terms are so good. And this is the only kind of financing I've ever seen in my entire professional career of lending, which has been decades, where somebody could usually get approved for well more money than they even want. The approval amounts on this are really, really, really high. Okay, the other use case for this is that maybe you're out there trying to think about a business to launch or think about a business to acquire. Well, in that case, you're actually able to use the book of business from a company, an insurance agency you want to acquire as collateral to be able to get financing. And what is up? Mike South is in the house from St. Louis. Thank you very much for coming in, Mike. I appreciate you coming in and saying hi. So those are a couple of the main reasons that you're going to tap into book of business financing. Either you're going to use it to get money for an existing insurance agency, or you're going to use it to potentially tap into or buy an insurance agency, or even know this exists to be able to actually get it for an insurance agency you're launching. So my friend Ashley and I, for example, had that conversation. She's like, I want to be able to expand my insurance company. I need money to do it. I'm like, well, why don't you tap into the book you already have and use that book as collateral and use this kind of financing to do so. So it's really good to be able to use a new insurance agency to be able to expand, an existing one to be able to get money for whatever needs you need or whatever needs that you have. And then the other option is to use it to actually acquire a new agency or a new insurance agency as well. So you're going to get a line, or you can get a line of credit. We're using the recurring commissions or those renewable commissions as collateral to be able to get financing, right? And ultimately, that income, those renewable commissions, is what's actually used. And you don't really need to use credit. Credit doesn't really make a difference in this. The lenders will lend even if you have like low 600 type scores. They don't need any other kind of collateral. They're not really looking at the cash flow of the business as well, revenue, bank statements, all that. What they're really just looking at is the amount of the renewable commissions you actually have. So typically you're able to get this, and in order to get approved, they're going to want the equivalent of like a 12-month commission breakdown, or a 12-month breakdown of the actual commissions that you have coming in, right? The renewable commissions that you have coming in. So this is ideal for insurance agents, for insurance brokers, and firms that have at least 12 months worth of steady a book of business, right? Have 12 months worth of actual commissions that are renewable. And it's especially useful for those that are looking to buy an agency, because a lot of agencies that you look to buy don't even know this exists. So they may be struggling and want to sell because they know they're struggling and need money, and they don't even know that this kind of financing exists. So you're able to use this as an actual leverage to be able to get them to use an asset they already have to get in and buy an agency with little to no money down. And it really works best for an agency that has about 100,000 or more in annual renewable commissions, which again, lower amounts can still qualify, but 100K is pretty conservative for what most insurance agencies are going to have. So how can you use this capital? Well, just about anything, any way you want to. First of all, it's really good with acquisition. So one of my good friends just sold his business for multiple 9 figures. And he was one of the biggest in the space that did roll-ups of T-Mobile stores. He would acquire T-Mobile stores and roll them up. So this is one of the best ways to build a 9-figure enterprise, is to actually find something that there's a lot of out there, like T-Mobile stores, like insurance agencies, and then just roll them up, go out and buy them and acquire them, and then add them to one central hub that you're managing all of those companies from. So you could come in, if you're looking to build an insurance empire, you could just come in and start acquiring other insurance companies, put them under your umbrella, and it becomes bigger, 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 and bigger, right? So as a result of that, this makes a lot of sense for acquisition, because you're able to use the book of business from a company you're buying to actually buy. Maybe it's your first insurance agency. Maybe you're expanding an insurance agency and you want to acquire more. You want to roll more up. Maybe you're looking to get into an industry. You could do roll-ups that's easy to expand and grow. Well, insurance is one of them. And the nice thing is that you're able to, again, leverage the book of business from the ones you're acquiring to pay a large part of the down payment or the overall sales price of that actual agency to begin with. Now, you can also use this kind of financing just for general working capital. So you can just use it for any general purposes that you may need to use capital to actually be able to run and operate the business. You can use it for debt restructuring as well. So if you have high interest short-term debt, this is a really good kind of financing to be able to get better terms and restructure that high interest debt. And it's also really good just for bridge financing, meaning that maybe you're using this to bridge the gap while you're out there trying to get other kind of financing like SBA loans. So it's really good for that purpose as well. Now, here's some of the details. You can get as little as $50,000 with this, and you can also get as much as $50 million. So it all depends on the book of business that you have. Okay, usually they're going to base the value on about 120% of the surrender value of your book of business. Now, if you're not in the insurance industry, you probably don't know what a surrender value is. If you are in the insurance industry, you do. A surrender value is like, let's say you're going to sell your agency to like the main company. Like, let's say you have an Allstate, you're going to sell it back to Allstate. Well, they're going to give you a surrender value, and you're able with the book of business financing to get 120% of whatever that surrender value is. Now, the terms are up to 12 months time, and it's usually a variable interest rate. So it's usually based on prime, but the interest rates are typically pretty low, depending on what prime rate is doing. Can be anywhere between like 8 and 15% is the rates you'll typically pay, depending on how high or low the actual prime rate is. And in a lot of cases, there's no minimum credit score requirements. So even if you have bad personal credit, you're still able to get this because they don't really care about your credit and your personal likelihood to repay the debt. What they care most about anything is like how much is the actual renewable commissions that you have. And again, the only thing you need here is collateral, is the book of business. You don't need any kind of assets as collateral. You don't need AR. You don't need stocks, bonds, 401ks, inventory, equipment, any of that. And you also don't need to prove revenue. It's not like they're looking at your revenue. All they care about is just the value of that book of business. So what do you need to apply? Well, if you go to apply, you can always go to creditsuite.com/get funding, and we can help you get approved. They're going to have you fill out a basic loan application, which is needed for any other kind of funding that's out there. They're going to want a 12-month book of business report broken down by carrier and commission flow. So they're going to want to actually look at your book of business. What is your book of business over the last 12 months? They're going to want to know the carrier for each one of those. And they're also going to know the commissions basically that are coming in from that book of business as well. They're going to want a year-to-date P&L statement. So they are going to want to like look and see where the business is right now. And sometimes they may actually ask for tax returns or a business plan. Not as common, but those things are sometimes asked for. Again, what they mostly care about, the most valuable thing you're going to provide to get the application approved, is that 12 months worth of book of business. That's really what they're looking for. And Brian, thanks for coming in and saying hello from LinkedIn. If you're just coming in, give me a company's name or your company's name here in the stream, and I'm going to give you a shout out. So let's talk about pros. Let's talk about risks. Let's talk about red flags. Pros is this is fast capital. I mean, it just is. You're able to get this kind of financing in 3 weeks or less, sometimes as little as 2 weeks or less. The other pro is that there's really no personal credit check or personal credit doesn't really matter. So even if you have personal credit issues or you don't want inquiries on your credit report, this is a really good kind of financing. The other pro is that you can use the funding for pretty much anything you want. You can use it to acquire a new business. You can use it to acquire the business that you're actually getting the book of business from. You can use it for working capital. You can use it for almost any of your business needs. Now, some risks are that the interest rate is variable. So as the prime interest rate goes up, well, then your payments can go up as well. So some things to think about as well. So you have to budget conservatively because there is a risk when you're dealing with any kind of variable rate. Now, red flags is that you avoid if your commission stream is highly seasonal or declining, right? So if you're a declining insurance agency, if you're not building more commissions and you're losing them, well, then that can be a problem. Or if you're seasonal, which most insurance companies aren't, but some red flags, some things to look out for there. Lenders want consistency always, and they want to see growth. They want to see that you're increasing month to month, not that you're decreasing month to month. But that being said, if you look out and think about those red flags, then book of business financing can be perfect for you for either expanding an existing insurance company or being able to actually acquire a new one. And by the way, Brian is in the house from BJR Capital. So thanks for coming in, Brian, and giving us a shout out. So I'm going to wrap up. This is a short one today. But again, what we're going to start doing is sprinkling in some of these short funding program overviews with you. We work with about over 100 different funding programs that are out there. So over 150 funding programs to over 1,000 different lenders. And what we're going to start doing even a lot of times on Thursday is when we go live, we're going to spend maybe 15, 20 minutes just going over at least one or multiple different kind of funding programs. So you're going to know what this program is, how it works, the rates, the terms, how to get approved, everything you need to know. Keep in mind, there's a lot of different ways to get money to grow your business. So if you want to just see all the funding you can qualify for now, you can go to creditsuite.com/get funding. That's creditsuite.com/get funding. And there we will actually be able to come in and we'll be able to actually tell you all the funding you can get right now. Or you can scan this URL and we will do a free financial assessment, give you a free Dun & Bradstreet business credit report. And in this assessment, what's cool is we actually use our Fund Smart AI. We actually created our own AI that looks at every type of funding program that exists, all of them. And it spits out and gives you an actual PDF report of all the funding you can qualify for. This PDF report actually tells you business credit sources you could use to build business credit initially, and it gives you a list of every funding program you qualify for, rates, terms, links to get approved, everything. And this is a 100% free assessment where we give you that report. We even give you a free copy of your Dun & Bradstreet credit report score. So if you want to get approved for funding, you can go to creditsuite.com/get funding. Or if you want that free report, the AI report from Fund Smart AI, you can scan this QR code, or you can go to creditsuite.com/consult. So hopefully you got value from this training. You know everything you need to know about book of business financing. If you got value, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money that you need to start and grow your business. And by the way, Dwayne's in the house. Good information. I'm about to start an insurance company. Great, Dwayne. Awesome. If we can help you with this and tapping into this to actually be able to start it or to even to be able to acquire one, make sure you let us know. So thanks again for tuning in. Take care. Have a great day. And I look forward to seeing you Thursday at 1 o'clock where we talk about more cool ways to get the money you need to start and grow your business. Take care.